Hello there, welcome back to grade 11 accounting. In this video, I want to look at the question paper of calculation of accounting ratios. On this question is question 4.2 on that question paper. And the question reads, calculate the following financial indicators for 2022. Show all calculations in round of one decimal place where necessary. It is very important to take note that if we have got decimal places, let's take note that round of one decimal places, which is one decimal place, which is actually to the nearest rand. So we have 4.2, 4.2.1, which reads percentage gross profit on cost of sales, which is 3 months. So the information that we have that we are going to calculate that gross profit on cost of sales is the one that we are having there. We can just go refer to the balances that we are given that we are going to use to calculate our gross profit cost of sales. So here, that's where we are. That's where we have information that we are going to use for the calculation. So you see that we put our gross profit is not given, but our cost of sales is given as 2,142,000. So remember, first of all, we have to put down the formula for calculating our gross profits and cost of sales. So we can just come here and see how we are going to present that. We are going to say our, remember this is 4.2.1. So the formula that we are going to use is gross profit over our cost of sales. So obviously we are going to multiply by 100 over 1. So we're going to leave it as a percentage. So gross profit, remember, we are not given, but gross profits, you can always find it by saying our sales is our turnover. Then we use our turnover, then we subtract cost of sales. Like our gross profit. So remember, in the question, we do not have gross profit, so we can first by calculating our gross profit. So our turnover, we got 3,218,000, then we subtract 2,142,000. So I can just go there and say 3 million. Let's try to see. It's saying now for gross profit, we are saying it is equal to 3,280,000. And then we subtract your 2,142,000. So this is your gross profit. So basically now to calculate now our gross profit over cost of sales. So we are just going to repeat as we are presenting the calculation of gross profit there by saying our numerator is going to be 3,200,000. This is now the ratio. It's going to be 3,218,000 minus 2,142,000. Then you get your gross profit. Then after getting your gross profits, you divide by cost of sales. Remember, cost of sales is given. So now we can now say over cost of sales, of which figure for cost of sales is 2,142,000. Then the answer that we are going to get multiplied by 100. So if you calculate it correctly, you're supposed to get 50%. So this is the answer that we have on the first part of the question. So we can we'll try to move on to the next question. So if we move on to the next question, you see that second part of the question reads percentage operating expenses for turnover. Percentage operating expenses for turnover. Basically, what we are saying, we're saying operating expenses over turnover. If you go to the information that we have, you see that operating expenses given is 504,740. Then our turnover is 3,230,000. So it's simple as that. So we say this operating expenses over our turnover, we multiply by 100 over 1. Answer that we get be in a percentage 4. So we are here on the second part, which is 3. Sorry, we are on 4 points. Here we are saying 4.2.2, and we are saying the formula that we are using is operating expenses over turnover. And then obviously we are multiplied by 100 over 1. Then our operating expenses, remember, we got the figure for operating expenses. Let's just refer back there. We got 512,740, turnover 3,218,000. So I'm going to present as such. Then go back. Operating expenses now we are saying it's 504, 504,640. Say over 3,218,000. And then we multiply by 100 over 1. Then the answer that we are going to get there would be in a percentage. So if you calculate it, you see that the answer that we are going to get there is going to be answer that we get there is going to be 15.955%. But obviously, the question is saying round off to the nearest whole number. So we are coming here and look at the end that we've got 9. So 9 is going to change our 5. Since the 9 is in the range 5 to 9, 8 to 1 to 5, and 5 then becomes 6. So our answer becomes 16%. So this is what we have to take 4.2.2. So we move on to the next question. Try to see what we give in terms of the next question. For the next question, it is the asset test ratio. Remember the formula that we have for asset test ratio, we say current assets and subtract the figure for inventory that we're given in the question is to current liability. So we are now on 4.2.3. The formula is current assets, we subtract our inventory, subtract inventory, and the answer that we get, we make it as a ratio of current liabilities. So this is what we have. So we just check our figures there in terms of current assets, inventory, and current liabilities. Go there and try to see what we get in terms of those figures. So you'd see that our current assets is 430,506, and we subtract our inventory, it's 357,606. Then the other that you get to make it as a ratio for current liabilities, which we have here is 401,150. So we are going to just present it as such. So we come here, we are now saying current assets figure is 430, 406 to subtract our inventory, which is our 357,660. Then the answer that we get, make it as a ratio to current liability, which is 401,150. So if you subtract here, you see that the answer that we are going to get there is going to be 72,900. Then you make it as a ratio of 201,150. Obviously, we are going to divide by 201,150 because at this side remain as 1. Kind of like this side here, we are saying it's always remain as 1. And then obviously we now find the figure that we have on the side. So what does it mean to remain with 1 here? It means we divide with the figure that we have to calculate this both sides of the ratio. So if you do that now here, you are also supposed to divide by 201,150. So if you calculate it correctly, let's try to calculate to find the correct figure. So if you calculate it correctly, see that here it's going to remain as 1. 201,000 into 201,000, 201,150 into 201,150, get 1. This is our 1 year. And here now we say 72,900 divided by 201,150. We divide correctly, we are going to get 0.3624. And then obviously we are now rounding it off to 1 decimal place. We are now rounding it off to 1 decimal place, which means you are now going to get 0.4. Since we have 6 here, we change our 3 plus 1 times 4. 0.4 is to 1. So this is our acid test ratio. So on the last part of the question, with questions that we want to look at according to this video, let's try to see the last question that we have there. The last question is saying debt to equity ratio. Remember, debt will refer to non-current liabilities. Debt is non-current liabilities, then you check the figure for equity, then you make a ratio there. Basically, that's what we have there. So our debt, let's try to check what we have. Non-current liabilities for 380,000, then our equity is 496,610. So this is the ratio that we are just going to make. 4.2.4. See, oh, 4.2.4. Saying debt, which is the same as saying non-current liability is to owner's equity. So the figures that we have there, we have a non-current liability, remember, is 380,000 is to owner's equity is 496,610. So obviously this side again should remain as 1. So to remain as 1, you divide by the full figure that we have here is 496,610 both sides. So you do that here, obviously it's going to remain as 1. This side is going to remain as 1. As you divide there, you're going to get the answer of 0.7691. Then obviously you're going to round it off 1 decimal place. Whether we are here, they're saying you put 6 minutes in the rate 9, so it's going to change our 7 to become 8. So our answer becomes 0.8 raised to 1. So this is our answer that we have there in terms of debt to equity ratio. So this is what we have, guys, according to this video. Those who are subscribed, please subscribe and say we're still coming with more videos as we prepare for that. Let's for this video, send it out to meet again.